How you Warriors? It's beginning to look a lot like Christmas. Last full week of trading. Then we get, the holidays breaking up the weeks with Christmas and New Year's. So also multiple central banks this week. So CPI. So, don't relax, but, don't be too aggressive into year end. It's like I say, don't try and make your week on Friday. Don't try and make your year in the last few weeks of December. Things will thin out dramatically after people close books this week, and you could have very exaggerated moves. It's okay to wait till next year, just like the huge hedge funds do. So let's start with currencies. And the title of this is I believe that cable can make a move towards 131, which is the old highs. Very important where the dollar is right now. You're wrong under 25. On a close under 25, then we have another level to go. I did for 2 weeks in the euro talk about 107.50. That was from up here. And the action in the dollar is, we have some important resistance here at 420. If it gets through that, we could make a move up towards 105. But the euro at that level, 10, talking about this 107 level should be the way that you approach it. Closes under 107, get out of the way, but it's still possible that this is a pullback before we get new highs. Last week, I talked about being a buyer in Aussie at 65.20. Low was 65.25, trying to advance. It's going to be interesting to see if we could hold these lows. It's actually holding up pretty good. Otherwise, I'd have stops under 5.25 because if it gets through there, I think we'll see 4.5 to 4. But definitely holding up better than the rest. Canada, I'm bearish. A pretty weak rally. It doesn't even do much when the dollar's strong. I'm looking for 132. Look for rips. If there's one more leg higher in the dollar, I don't expect Canada to take out 137, but the count here is going to take it back towards the lows in July, 132 in Canada. And it did pay not to have FOMO in gold. Okay. And that's something I talked about, unless you were trading Asia, trading Tokyo, and whatever else was happening in Asia last Sunday night, it was okay to wait. I think that gold could have some type of recovery if the dollar does turn down and we start heading back towards the lows. And these are the lows I'm talking about, new lows. If we take these out, I think we could challenge these lows that we had last year in the summer. So you could have some type of recovery, but I think that 1900 gold is feasible. I had this line drawn a long time ago. Some people are saying that this was an ABC. There's 1890 on the test of that trend line. So, let me show you the weekly. Here's the bear case that this was an ABC. It was a 3 drive. It was a false breakout. And, they think that, we could take out 1800. I'm not in that camp. I'll be looking for buys in the miners and the gold down around the 1900 level, 1880 in the coming weeks. The yen has acted like really nothing happened, although they cleaned out a lot of the short-term longs on the break on that story that things were going to change. I wouldn't get too bearish the yen, that we're at resistance, because I know I've been talking about this for a week or so, that I think that yields are going to bounce. Here's your 10-year. Okay, I think that we're going to bounce towards 460. And the TLT, look at where it found resistance right at the 200-day. Okay, so was real right down here for the longs. Thought that we'd start peaking here around 92. It extended. but I still think FOMO is not the right idea. I think you'll have a chance to buy TLT down here. This will be about halfway back at 88 in the days ahead. And why don't we talk about the S&Ps? Because I think it could be important now that everyone thinks nothing could happen and it's only a one-way street. When you think about it, since before Thanksgiving, we've really just been moving sideways. We have a daily divergence. This morning's high actually took out the July high by one handle. So if anyone was protecting their shorts in the market and didn't get out way before then, they're gone. And I still believe that we could have a shakeout here, uh, probably based upon what yields do, that we could pull back towards 4,400, 4314. Some people are talking, have counts down at about 4230, 78.6 back. So I'd be careful, especially since a lot of money managers have been chasing performance. And if we get a sell-off, especially in thin market conditions, it's almost a perfect time for a bear raid when there's not as much volume on both sides. And perhaps a lot of people have closed their books by the end of the week. So I'm still looking for a pullback before we get new highs in the market over 4,800. Think that could happen. We actually have a little gap up in VIX. I don't know what the reason is, but we closed down the lows, so no one's long VIX anymore. And here we are gapping up at 13. I have this 14 level as a very important level in VIX, and if we get above 14, that'll be a sign to you that be careful about risk on. So watch VIX closes over 14 is a danger sign for that correction that I'm talking about. I believe that's what I wanted to cover today. Dollar, got to the levels that I thought we could in euro. Cable's the preferred long because of how EG is acting. Still no bottom in sight. We will diverge down here, so we're getting closer, but I talked about the EG making the euro the preferred short when I was talking about the pullback from 110.50 to 107.50. So I'll be alert for a change, but it hasn't happened yet. Something else that an associate of mine talked about today is US dollar MEX. And, US dollar MEX has been holding up pretty good. They also meet their central bank. They have a very good central banker. And US dollar MEX, despite the carrying charges, will perform to the upside with risk off. So we're not anywhere close to the lows that we put in, which are higher lows when you look at through your telescope at the daily. Let me fix this. I don't usually talk about it, but I am now. See, so this whole pullback, and we've been rallying, since Thanksgiving with the market rallying too. So US dollar MEX could squeeze. That's another potential sign of risk off. So I want to wish everyone happy holidays. I have one of your favorites here with us on Wednesday, Dave H. Contrarian. So David's going to be with us. It's going to be great to, check up with Dave. And besides his, he's the most bullish bear out there. We'll see if he still has his melt up targets. And he's also starting to talk about what happens at the end of this melt up. So should be a fascinating interview. Mike will be on in an hour and a half, and I'll see you with Mike tomorrow at 8 a.m. EST when it's time for Mike and me. Don't just count your pips, count your blessings, and I'll see everyone tomorrow.